Well, by popular demand, we continue the Nathan's little unqualified stock advice posts, and this one I have to do a video on because, it was too long of a post to write. It was going to be annoying. There's a few things that are going on right now that tell me they're very strong indicators, and I don't mean indicators like some of these these people you see on CNBC talk about, like, there's this alpha or whatever. No. I'm talking about things that are indisputable facts that tell me that we are right now entering a bull market from hell, another rocket ship. And, we already had one to get us over 30,000. This next one for the Dow is what I'm referring to there. This one could take us very, very high. We're talking 40,000 wouldn't be out of the question in the next 12 to 18 months. Of course, nobody knows what the market will do, but let's talk facts for a second, because these are really important ones. This last week, we've had a number of financials, like American Express, for instance, Bank of America, come out and, put their finances out and their financial reporting. And their financial reporting, they can't make up, this is all very, very highly regulated stuff. Like, even for publicly traded companies that might get a little creative with the way they report, you can't do that in finance. You just simply can't. You can't do it in finance. You can't do it in insurance. So, look at the financial reports from American Express and Bank of America, just to name a couple, and everything since. And you will find double-digit growth in spending by consumers on credit cards, double-digit growth in banking activity. And, it kind of felt like we were in a slow market there for a second. But you can't fake steak. Like when you get a big marbled steak at a restaurant, that's not something that somebody can make. It's not like the roast beef at Arby's. This is real. When you have all the financials coming out, all the financial institutions coming out and having, record years with enormous amounts of economic activity, that's real. All that money moved. And here's what that tells you, that I'm just so surprised that nobody from Bloomberg or CNBC or the Wall Street Journal has come out and said, all that extra money, all that economic activity, the additional dollars that were spent on American Express credit cards, etc., all of that got spent somewhere. That money landed somewhere. And, for most Americans, they're buying stuff from Procter & Gamble, from Johnson & Johnson, from Apple, and all these other companies that are part of the Dow. They rule the shelves at Walmart. They even rule the orders at Amazon. So, with knowing that these kind of numbers have come out, and that the amount of economic activity is absolutely, indisputably, provably, demonstrably higher than it was last year by double digits, and we're about to hit earnings season on all these other companies, and big surprise, Coca-Cola comes out, and look at what happened. So, this week took off. This was not unexpected. This was absolutely known. It was an easy fact to come up with. Now, you might say, but Nathan, wait a second. I own some Facebook stock, and I own some Alphabet stock, and I'm a big fan of Alphabet. I think more so than Facebook. They just own the IP of every human brain out there. But they came out and they missed on earnings. But Nathan, you say there's a bear market. Well, why is Alphabet and why are Facebook missing? And I think that's very easily explainable. And that all of you know the answer already, but I'll put it in what you've probably been thinking into words that make even more sense. We don't need Facebook right now. We don't need Facebook advertising. We don't need Alphabet advertising. Just as small business owners, and I know in home inspection there's certainly going to be some slowdown with interest rate hikes. The activity as far as real estate transactions are concerned is going to change. It's going to be off. It could be off 20 or 30% if they go a little bit higher with these interest rates. But for most of the market that sells anything, they don't need to sell anymore. That's not their challenge, and you guys know this all too well. The challenge is actually delivering. The challenge is, supply chain management. The challenge is getting people to work. The challenge is making sure that your existing client base is happy and well served while dealing with record amounts of volume. And that's what businesses, small and large, are doing right now. They don't need to stop and create yet another sales funnel on a platform like Alphabet or Facebook that is so brilliant at making sure that they are charging you the maximum you can, that your ROI, sucks compared to other means, other advertising methodologies. And none of these companies need more sales. Their sales are great. It's about delivering. So, everybody that is in the Dow, these multi-billion dollar companies are very good at delivering. And so we know two things. We know that they're good at delivering, and we know that there was an extra, depending on which financial institution you look at, an extra 10 to 30% worth of economic activity in the last quarter, and it all landed somewhere. So before that, these things, they're facts. They're not, it's not stuff that can be made up, and it all, starts with the reporting from a publicly traded financial institution that is the most regulated thing ever. And here's your fact. Your economic activity is double digits up. Think about the things that people are that they buy, that they have to buy every single day, that they'll buy more of, or they'll buy a higher level of quality brand of, or, they'll end up as much as it sucks, because some people are having trouble right now absorbing and being flexible to the change that is heightened inflation. That heightened inflation is going straight to the bottom line of the companies that you have been investing in, if you've been following my list. And let me just tell you the list again for those of you that are new to the game. I like the Dow 30. I like looking at the Dow 30, taking your top 20. Okay, look at them, take the top 20 that you know the most about, that you like the most, that you believe are winners. My preference in doing that is, being a financial investor, I would stay away from Apple as an example. I don't need something that's, selling at 40 times earnings. But you do that, and you buy on the dips, and you sell every once in a while on the peaks, and you'll do pretty well. And between the dividends, which, probably if you pick the right 20, you're probably going to end up with 10 to 12 companies that have 1.5 to 2.5% dividends. Man, you add those on top of, an incredible equity gain, and you're going to win. So right now is not the time to retreat to bonds or cash or anything else, and I get paid nothing to give you that advice. I have nothing but risking our relationship, but I'm telling you, I'm putting my mouth where my money is. This last couple months, as the market retreated a little bit, were massive buying opportunities for me, and I hope some of you were reading my post, reading between the lines, and doing the same thing. Because if you did, this last couple weeks have been really amazing. It's only going to get better. It's not too late to get in. Look at the 10-year chart on the Dow to understand what's really going on, and that's why I wanted to get this on video with you guys, because this was a complex matter. So inflation dollars and double-digit growth in economic activity that is absolute and landed somewhere. Those are the two things use it to your advantage. We'll see it.